Hey traders, welcome back to another weekly video where I go over trade setups that I'm looking for in the week ahead, as well as talk about my own trading, which is what I've been doing each start of the week video. I go over my brokerage account statements and just go through my performance. So last week we ended June. We are going into July trading starting tonight, tomorrow, depending on where you're at when you're watching this video. June ended up being a plus 30K just about month. So we just missed the 30K by like $500 there on the account, which is pretty dang close. I'm sorry, not 500, like $50, like really close. So anyways, we were up 4.45% in the month of June, which I would consider to be a very solid month. In fact, my average is not nearly that high. January and June both were exceptional months. March was also pretty good as well. And then we had February, which was a down month. Now, I always like to show context. This year has been really good for my trading style. Last year was not so good. 2021 was great. 2020 was great. The point I bring that up is because my style of trading, which you guys may be familiar with, which is trend following, pullbacks, momentum trading, tends to do well when the markets are up for me, since I trade a lot of indices and gold, etc. So anyways, have not had a bad year at all. So anyways, here is the cumulative profit and loss on my account all time, 141.19%, and floating about 130,000 in gains on this account. Anyways, let's jump in now to the charts and let's talk about some trade setups. And by the way, before we jump into some charts, I should remind you guys that if you are looking to join our Discord community, you can actually get access to all the trades that I'm taking in real time. So if you'd like to get notifications for when I take trades, this is what it looks like. So every time I take a trade, I share a breakdown report as to why I'm taking the trade, the analysis behind it, my entries, my exits, and of course, really important gifts. If you'd like to join our community, there will be a link down below in the description for you to sign up. And again, receive all the trades that I share. I try and be very transparent with what I'm trading, when I'm right, when I'm wrong. Please know if you join my group, you're not going to see me take 100% win trades. I'm not a guru. You know, my trading is focused on slow and steady conservative trading approach. And yes, those numbers that you saw were decently large, but it's because I'm working on a large capital basis. And years ago, I would not have been so fortunate in that situation. So just remember, it takes time, and I hope that maybe that motivates some of the newer traders out there. I know when I was new and I saw people doing big things like that, making progress in their trading, it was a super big motivator to me. And I promise you, it can happen. Even if it takes some time, it can happen for anyone who is diligent in this stuff. Anyways, let's talk charts. Let's talk about the dollar here. So DXY, this is the dollar currency index, traded up last week, had a good week actually, found support around the 102 level, pushed off of it, broke out notably from this key level of downward trendline resistance. I've been using this tool, by the way, guys. I don't know if you guys have seen this on TradingView. Love this tool. It is called let's see where it is, parallel channel. So I've always been, I'm not a huge trend line person, but when I do like trend lines, I kind of think of them in my head as a zone. So it's really cool that I can use this parallel channel to actually draw sort of a zone on my trend lines, which is what I personally, like I said, think of them. I use support and resistance as zones. Nothing is exactly perfect when it comes to that. So I like to use zones. So it makes sense that I would do the same with horizontal trend line stuff. But we have to take a look at the dollar and acknowledge something. The dollar is now kind of trending up. We've got some higher lows. We've got, again, a double bottom that broke out of resistance. All of these things are relatively bullish. Now, the question, however, will be for real bulls to come in. If you guys study like Elliott wave theory, they're big on like the number of waves and that sort of thing. It's not particularly my personal cup of tea, nothing against it, but what I'd be personally looking for here is just to see another break, like another just decisive move, like something like this, or even like this, just another big move that gets us above this key resistance, as this was a huge barrier. I remember covering this level multiple times in our analysis during those Sunday videos. And now the question is, can we break that zone to the upside? If that happens, I think dollar strength is here to stick around for a while. Now, why is the dollar strong? Well, one of the big reasons for that is that we have to go take a look at something very interesting. Not everyone does this, but let's look at the 2-year, okay? I know a lot of traders don't really, currency traders are like, why does this matter? It really does matter. The 2-year government bonds yield is a forward-looking vehicle that shows us a pretty quick glimpse into what the Federal Reserve or the central bank here in the United States is likely to do with their interest rates. And recently we can see that this has been pushing to the upside yet again. Now, why does this have anything to do with the dollar? It has everything to do with the dollar. When we go back to the DXY and we know yields are rising due to expectations that more rate hikes are coming, when we take a look at this dollar, yields rising, meaning further rate hikes expected, all of these things start to make sense if you're a fundamentalist. You're like, wait a second, those are bullish catalysts, and short term, the dollar may have some upside. Anyways, that's my take on it. I think short term, if we can break through that level, that's a pretty bullish case scenario for dollar bulls. So keep an eye on this one going into next week. So where does that leave me with trade setup? Am I going to be long the dollar? Am I going to be short the dollar? Well, let's go take a look at some more concise data, and we'll make a decision as to what I want to trade. So let's go through the COT reports, but let's do that in a minute. I want to go to the watch list tab. For those of you guys who are EDGEFINDER users, let's make sure we refresh, get the latest data here. This gives us an insight as to what is looking most promising according to the things that you guys hear me talk about all the time in my videos. I am one of the developers, one of 3 people on the dev team for building the software in front of you here at A1 Trading. And when we look at this, all of these different factors are things that you'll hear me talk about, you'll hear me address, but we just use software to automate the scanning process and to visualize everything easier. What's sticking out to me right off the bat is dollar yen and euro yen. I'm going to be honest with you, I'm not super big fan of the CAD JPY. I still will trade it, but I prefer to trade these 3. That's just 2, Nick. What about, pound JPY? I like pound JPY as well. These are currency pairs that I really do like to trade. When I am trading the currency pairs, which is less nowadays, to be completely honest. I've been trading a lot of indices and a lot of gold. You guys saw my performance review at the beginning of the video. A lot of that is trading the indices recently. This year has been exceptional for that. So I'm kind of back on that train. But as a trader, I mean, I'm pretty fluid. I trade a lot of different things. I trade even options, which is a newer thing that I have been discussing. Anyways, dollar yen and euro yen. Sorry, I didn't mean to do that. Let's take a look at those. Dollar yen, again, would trade higher with yields very often. As we mentioned, the 2-year up. Let's take a look at this. Let's do some technical breakdowns. Now you might say, Nick, this thing is just overbought. There's no way you can buy this, right? Well, as crazy as it sounds, there was plenty of probably buying opportunities during this period of time. Are you playing a game of musical chairs? A little bit. But one thing that's cool is that, you could still potentially capture some quick moves while keeping that stop loss relatively tight. So what I mean by that is that when we drop it down to the 4-hour and actually even the 1-hour chart, we can see that there's some pretty defined levels. And what I love about predefined levels is that there usually, for me, is some pretty good risk to reward in those opportunities. So when I look at something like this, right, that's a key level, right? This is a key level. These are zones where buyers and sellers fought over an area and buyers came out on top. If those levels get retested, I would generally be pretty interested in trying to buy it, right? Especially when the EDGEFINDER is giving me a +8 on dollar yen. It's hard to ignore. We're getting a bullish reading in almost every single category that we focus on. Now, I'll go through some of this stuff in more detail, but let's start with the COT data. If we go take a look at the dollar against the Japanese yen specifically, we can select this within the EDGEFINDER's tools. So let's go here and let's go find, where's the dollar? There's the dollar. We can compare these two. And what I want you guys to see here is that we had an increase in shorts on the Japanese yen as of the most recent weekly filing. COT data comes out every Friday, and this software automatically pulls it in and visualizes it for traders. There will be links down below in the description if you'd like to get access to this tool. It is a purchasable product. Again, like I said, I work at A1 Trading. I'm the owner of A1 Trading, but I work there every single day with my team on building and maintaining the software that you see in front of you. So if you guys would like access to it, there is an access code down below in the description that will take off a discounted amount of price off the top line. So if you're interested in getting this product, if you're a subscriber here, I do genuinely and sincerely appreciate your viewership. And if you guys would like access to the EDGEFINDER, we have a subscriber discount code. It is I'm sorry for the bad handwriting, YTVIP. If you plug this in at checkout for the EDGEFINDER, it's going to take off a significant amount of the price. You can go check it out for yourself, but you'll see it is a significant discount off of the tool to save you guys some money if you're interested in purchasing our product and supporting our project. Because again, like I said, this is something that we work very hard on building. Anyways, the COT report data shows us that there's a clear preference on the US dollar side compared to the Japanese yen. The Japanese yen is very short biased. The dollar is very long biased. What do I mean by that? Institutional money is buying the dollar. They have a bigger position on the long side on the dollar and a very big short position on the Japanese yen, with the most recent change showing not too much of a change on the dollar side, but a big increase in shorts on the yen and a small increase in longs. Why would this matter? Why would both be increasing? Well, it may just be that participation is coming back into the markets, right? Meaning big money is just betting more on both sides of the trade. That can sometimes be confusing to people because people say, why can both be increasing? Well, it's because participation, net interest can just increase in the particular asset, and more longs and more shorts can be added. But again, overall, the net is what we pay attention to most. Big money is long dollar, short yen. Okay, so that adds a nice confirmation to my trade setup on dollar JPY. This level looks pretty good. So how would we enter this trade? Well, for me, and again, this is not a we thing, I'm just saying, it's just an expression. How would we generally approach something like this? Well, my personal way of approaching this would be looking for this zone to come back into play and essentially keeping the stops pretty tight here. These zones here, I don't want to take the full risk of an entire zone. So what I mean by that is that if price breaks this zone, I need to get out of it because it's likely headed down to test this zone. And vice versa, if I tried this zone to take a buy and it didn't work out, I need to get out of the way, as if it breaks that, it may be very headed down. So this is how we build very particular stop loss orders, right? To keep my trade from becoming too much risk. So if I'm very patient, I wait for this level here, which is still a ways away, by the way. It's about 12, 13 pips from current price, and we may have a gap on the open. So please be careful with this sort of thing. What I need to probably do is keep my stop loss relatively tight. This is a 17, 18 pip stop on the dollar against the Japanese yen. And already, if price just continues to travel in the channel that it's been traveling in, meaning, again, we could get our handy dandy out here, and we could say if this thing just continues to push up and retest the highs, that's already a 5-to-1 risk to reward, talking about 92 pips on the upside, right? That's not bad. So I like the idea here of looking for a nice push off that, but let me add some more context to this. You guys know, if you have been following my trading style for a while, you know I don't use take profit orders. In fact, if you're a member within our Discord channel, people often have questions about this. Nick, why don't you have a target on your trades? So we could zoom in here with my handy dandy. There we go. Yes, right here. Okay. Notice right here, I don't have a target. And newer people to my channel may be confused by this, but regulars know I like to trail a stop loss. So let's go back to our example here with dollar yen that I'm watching for this week. And boom, we're back over here. Sorry, I don't have an editor to make all this so seamless. When I do these Sunday videos, I literally film them from home, and Chandler, my editor, he's a normal person who doesn't work on the weekends. So I'm out here kind of just freeballing it. Anyways, if I catch this move and price rallies in my favor and we put in like a higher low, right? And we shoot through the highs, this would be a signal for me to take this stop loss and move it up and keep doing that. Repeat that process until it trails out. So I don't take partials and I don't take profits. I basically trail my stop order until it triggers me out. This has some inherent pros and cons. I've been doing this for years. I've gone over the pros and cons a million times, but the short answer is, the pros, it can let you have massive winners. The cons is it oftentimes stops out way before that and you leave some money on the table. There's nothing foolproof in trading. There's nothing 100%, but that is the strategy that I really like. I really love the idea of trailing a stop. Let's keep going and talk about more trading setups. I'm sorry I spent so much time on dollar yen. Gold had a key breakout here last week. Resistance came in, but sellers were not able to hold it, and buyers pushed to the upside. Gold, big movement up here, and with it the indices, which we're going to talk about in a second because I've got a sore story to tell you guys. So gold breaks out here this past week, and this looks very intriguing to me. The EDGEFINDER has gold as, in fact, let's check the COT data real quick. What's gold at? Gold, change in long. Ooh, this is a little sketchy. There's a decrease in longs, and there was an increase in shorts. So we're still at a 76% long ratio, but that is a little bit of a question mark for the gold market. Again, pushing up, yet institutional money was shorting this past week as of the latest filing. Now, please remember, with COT data, we get Tuesday's data on Friday. So there is a built-in delay. So in the last couple days here, there could have been some buyback going on, but we won't know that until next Friday. So that is one of the flaws with COT data. It's not a perfect indicator. I also want to take a look at seasonality. It's a great time to do this. Seasonality allows us to look at month to month what a particular asset is doing. Remember, this is another feature within our software, which will be linked down below in the description. If you are interested in purchasing it, again, make sure to use that code YTVIP. It's linked down below in the description. It's YouTube VIP. So if you're a person here who watches my channel, if you watch my videos, I want you to get a discount because I do appreciate your viewership. So let's see. So if I want to go to gold here for a moment, for the gold bugs out there, let's go find gold. Click here. All right, so June ended up being a negative month, but July and August are both expected to be positive months for gold, albeit a little bit small, right? There's not a huge upside bias for the month of July, but there is a pretty good one for August. So regardless, I think we may be pivoting into a bullish period on gold. It's been certainly a tough period for gold, and I do think that we're getting closer and closer to the Fed's kind of tipping point where they're going to start really pausing, no longer rate hiking. And again, that is still up for debate. Many people are expecting 1 or 2 rate hikes going forward. The Fed keeps signaling that they're going to do 2, and the market tends to push back and think that it's only going to do 1. So it'll be very interesting to see. Regardless, gold had a key breakout on the technical side. This is very early trying to catch this trend. So if you were to go bullish here, be very careful because, again, just this one little breakout does not necessarily mean that the downtrend is just dead, right? Oftentimes we enter into sideways markets before potentially breaking. But what I like to see personally is I like to see higher lows and higher highs for a bit before I try and jump immediately in. So perhaps a higher low here could be a signal to get long if you're super bullish, but maybe the more conservative way to approach this would be breaks, retests, and start looking for those pullbacks should they occur. That would be my approach to gold going into this week. I am bullish. It does have some nice seasonality there. COT data is still overall net bullish. Let's take a quick look at retail, see what retail is doing. This indicator that we've got pulled up, this is retail positioning. We have it here for you real quick. What we do is we pull in data from a few brokerages to see where client positioning is currently at. And what we see here is that for the dollar Swiss, for example, the way to read this would be small traders, retail traders, quote unquote, dumb money, for lack of a better term. You and I, really. Not all of us are losing traders, right? But the vast majority of retail traders are certainly losing more money than they're making. And so this gives us an insight into what they're doing with their positions. Are they buying the dollar Swiss or are they shorting it? Well, right now, they're buying dollar CHF. They're buying dollar CAD. They're buying Aussie dollar. They're mixed on NZD USD. They're shorting dollar yen. I like that a lot. Remember, I mentioned my bullish idea on dollar yen. They're shorting that. Pound dollar, they're shorting. Euro, they're shorting. So these things would be bullish readings for us, right? Because again, retail is long, and retail makes up, by the way, a small component to overall trading volume compared to institutions, commercial entities, banks, corporations, that sort of thing. Anyways, we can also take a look specifically at gold. Let's go take a look at gold here. Gold is 58% shorted by retail traders, 42% long, at least on the data that we have. So this shows us, again, a slight preference right now on the short side for retail traders. When it comes to gold, I would like that to actually become more of an extreme. If it was like 80% short, ooh, that would be a nice, probably run to the upside that could form. So I do like that one. Let's talk about the indices. I mentioned I would. So wow, the S&P 500 rallied, and guys, I have to be so honest with you. So I am long biased on indices. I've got a couple things. I'll show you. This is my brokerage brokerage account that I trade on. It's called Webull. If you guys are in the U.S., by the way, I think it's like U.S., Philippines, a couple of very small countries. But if you're in the U.S. and you are looking to trade things like the S&P or you'd like to trade gold or something like that, you'll notice that regulated brokers won't let you do that. Like if you trade with Oanda or Forex.com or IG, you'll notice that there is no opportunity to trade like US 30 or NAS 100. It's because those things, CFDs, are illegal for US clients. We are not allowed to trade them. So what I do instead is I just trade on a regulated brokerage called Webull. And the link will be down below in the description if you'd like to check it out yourself. Webull is, I absolutely love it. It is such a clean trading platform. It's like trading on TradingView. They've got so many different indicators and tools, but I can actually also look at my positions. So the reason I pulled this up is because last week, oh my gosh, the pain that I endured when it came to the S&P 500. I went long S&P and made some good money trading this, but I got trailed out of a trade that I was in. So here's what happened, okay? So I picked it up right around this area. Beautiful entry. Actually, I'm sorry. I trailed my stop loss around this area. I actually caught this move down here, okay? And I'm gonna back this up because I know people could say like, oh, sure you did. Well, let me show you. I really did. I caught this move just so perfectly. The entry was so perfect. Not all my trades are this perfect, but I really, really loved this one. Price broke out of this downward structure. There's that trend line again. Price broke, retested, and I went long. And I was super bullish. I mean, I am still bullish in the indices. This year has been fantastic for me on that front. And so I ended up getting it. That, by the way, ended up being right here. So this is where I entered that trade. I bought SPY, which is, again, an ETF that tracks the same thing, the S&P 500. And so price runs up, and I am able to even, so my stop loss is here, price runs up, forms this low and pops again. I trail my stop loss up. I'm looking great. Price pops up again, breaks through this resistance, and I trail my stop, guys. Get ready for it. Price breaks this resistance. I trail my stop right here. So you know where I'm going with this. So my stop loss went from here to here, and I trailed it to here after at this point right here, the break of this resistance, I trailed that stop right here. So price comes back down, tags me out, and it just said, have a great day, and just launched up. So I was feeling some serious FOMO this Friday. It happens to the best of us. Literally, no matter what you do, sometimes this is going to happen. If you trade with a stop loss period, this is going to happen sometimes. And I do trade with stop loss, so my active trading with a stop loss. So it's a it happens and it's tough. Fortunately, I was able to capture a lot of the upside still through my options plays. So these are also something that I do inside of my my channel. So inside of the options trades room, man, we have been 4 out of 5 options trades in profit. It's awesome to see the options trading playing out so well. That's like an 80% hit rate on all the trades that I shared through options. If you guys are not options traders, please note there's a learning curve to options, but they have some seriously cool advantages that traditional, long short misses out on. Like, for example, I like to sell options, which essentially, again, I've done a whole video on this topic. And by the way, guys, let's do our keyword here. Before I forget, I just thought about it. If you guys made it to this far in the video, we're at 24 minutes. This is a long video. If you made it this far, you are seriously an OG. You are awesome for making it this far. Type the word and put in the comments down below options if you made it this far in the video. This is our keyword. The reason I do this is just because I want to leave a heart on your comment to let you know. So if you drop the word options in the comment section, I'm going to try and heart your comment just as an appreciation to you guys who really do support me just by watching my videos. Again, this shows people my videos by you liking the video and commenting options. It is a way to help boost engagement and support my videos. So anyways, I caught some nice upside in the options market. I sold puts here, which essentially if the market goes up, it's kind of a bullish call essentially, but it's not a call option. I'm selling puts, meaning I'm shorting someone's option to buy puts in the market. Puts, of course, are a bearish, leveraged bet essentially. So someone else out there bought this put from me. They bought a put for $335. So if price comes down here, they make a lot of money, right? They make a good bit of money off that move. I sold it to them. I shorted it and offered it to them on the market. It's an anonymous person. I don't know who that buyer is, just like you and I wouldn't know who bought or sold anything on the other side of the exchange. But I sold puts, and both of those trades are doing quite well, which is awesome. So options do allow you to capture, bullish moves on the markets as well. So I'm out there, missing, of course, the SPY run up, which was, I did make good money. I made like $900. So I can't complain that I, didn't make any money. I made money off this. So I shouldn't really complain at all, but it is hard to watch a move like that. And it's only human to be like, dang, that sucks. So anyways, I almost had a perfect week. I would say it was a very good week. We caught a lot of good upside on GJ and S&P inside of the group. But again, you can't win them all, or you can't be perfect on everything. If you guys would like to get access to the options, position, and swing trades that I'm sharing, as well as Frank's trades, who is my colleague on the live streams, he's within our group as well. If you guys would like access to this, there will be a link down below in the description for you to sign up for this. And again, remember to use that promo code YTVIP. And I mentioned it earlier, but if you guys would like access to our software, the EDGEFINDER, there is also a link and promo code down below in the description as well. And you can actually bundle both the gold and EDGEFINDER if that is something you're interested in doing. Of course, it is a bigger purchase, but if that's something you're interested in doing, use that promo code and you can apply it to the whole bundle purchase, which gets you a huge discount off of everything. Thanks guys for watching. Have a great week ahead.